Good morning, traders. It is December 15th, 2021, 8:17 a.m. And guess what? Happy Fed Day. It is FOMC announcement day. All right, let's get into the pre-market outlook for today. Today's title, Happy Fed Day with brief relief rally in sight. All right. Going back a couple days, I've been watching the market leaders, and particularly in the last video that I posted, Apple was of critical importance to me, and I was watching, trying to find a place to short Apple. I didn't get the short on in Apple, but this is now setting up for a great place to short Apple with assurance. So Apple slipped, and so did the market. So now I look for a bounce back in Apple, which will kind of spark everything else. It'll spark Nvidia, it'll spark Tesla to do the same. However, watch Microsoft, watch Google, because these are market leaders that could possibly kind of hold things back. As they bounce, everything else will continue, but if they kind of lag and don't take off, they're going to hold everything back to a degree. The market is not going to be able to bounce much without those participating. So that's what I will be keeping my eye on today. And another way to say it, Microsoft and Google, they kind of determine whether this rally that we have coming out, I'm not sure whether it will start possibly today, but it determines whether it grows legs and it keeps running and runs to somewhere significant, possibly back above 470, and to retest all-time highs again. But that's what those two will be on the cusp of deciding. With the FOMC meeting today, everything pretty much hinges around the FOMC meeting today. Whether the Fed will taper or they're going to change policy. And just as a sidebar, isn't it funny how all the technicals always seem to consolidate around these big announcements? Probabilities of certain things that I look for get to a 50-50 level where it's hard to tell one way or another. It's just always funny to me how that seems to kind of line up. I guess at one way or another, whether it's next week or later this week, traders will finally start to realize that the Fed doesn't really have your back anymore, and I guess in the trade to come it'll be realized. Something that I've been saying for quite some time is that the market is kind of being held up by fund managers that want to make these obscene bonuses. And in order to do that, they have to somewhat hold the market up. They have to show these games. They have to outperform the indexes. So I was kind of thinking that we were only limited in how far we pull back, being that we're this close to the end of the year, because they were going to do everything they can by selling losers and dumping tons of money behind stocks that are at or near 52-week highs, just to kind of hope that it holds the market together. And that's what we saw with Apple. Apple, Nvidia, Tesla, Google, Microsoft. For the longest, we saw selling off everywhere else, and then money just running to these few individual stocks, hoping that it could hold everything together. But then the last couple of days, we had Microsoft slip. We had Google begin to slip. We had Apple, which to me the most important, slip. So with that being said, I still think it's a limit to how far we actually drop before Christmas. I've been saying that this reminds me of December 2018. So I think we may get a flush before Christmas, and then after Christmas we get our bounce back to where we are, or just above where we are right now. So let's take a brief look at the longer time frame, because there's something that's important here that we will need to see. All right. Looking at this, and let me just bring a regular. That didn't do it either. Either way, let's take a look at the daily chart as to where we are. Okay, that did. All right. On the daily, this is a 1-year daily chart, and what we have done, we have basically gapped down into what's known as a spinning top. And a spinning top, it's neither a bullish or bearish candle. This is a candle that says pause. Wait for further confirmation. So with this being a pause candle and the spinning part here, which is made up of bullish volume right here, this says to me pause, wait for confirmation, but we're likely to get a bounce from this because it was bullish here, which means we ran into a lot of buyers down here that were willing to buy this back up. So it says we're going to get some type of bounce, but will it mean anything? And let me see if I can get my my drawings up here. But seeing this type of candle, it kind of puts me in mind to expect something like this type of formation, where we start to bounce up. We may close the gap here, and that's where we may reverse over. So I just wanted to point that out before I got into today's scenarios and key levels. All right, let's get into the key levels of today. We're going to start with the Jack resistance, which is going to be 464. Our Queen resistance is going to be 466/467 area. And then our King resistance level for today is going to be 468 through 470. Our Jack resistance level is 461. The Queen resistance level is going to be 460. And the King resistance level is going to be 458 through 456. Expect some weird stuff to happen today because of the FOMC meeting, and I'll get to that here with the scenarios. All right, the first scenario that I have for today is going to be a range day. However, we're going to have a strange quirk around this range day, if you've been following me, there are many variations to a range day. It's almost impossible to plot the path of a range day. However, everything revolves around 2 p.m. Fed meeting today. So, what I'm looking to happen, I did start putting on some bull call spreads yesterday for anticipation of this float up, because you never know whether we come out and start going up. But it would be wise to take advantage of a possible float up, but doing so in a risk defined way. And I use the bull call spreads because it's a way to define risk to something very small. And because volatility is so high, it is just not feasible to buy straight calls, knowing that volatility could come off and it could wipe half of the premium of that call away before you even start to see profit. But getting back to today's day map, we open up kind of flat and chopping sideways, and it's possible that we see a push back toward the 461, 460 area, the Jack or Queen support somewhere in there. And then we start what I like to call the Fed float, because usually anytime we have one of these meetings building up to it before, there's this kind of liftless float. It can happen to the upside, it can happen to the downside, but there's just this controlled float where we just kind of float in that direction, orderly, either up or orderly down, until 2 p.m. So I'm going to look for that to start somewhere around this 460 area, where we start to get this float up. And then the common theme about all day maps today is that we're going to have this very lightning fast, quick consolidation. And usually, whatever the first move is after or during the Fed announcement, it's usually a head fake. So if we get up If we go up first, that's your key to let you know it's at some point in the next day or so, it will possibly be a prevalent level to be short at, either from that time, but you have to have extreme faith in it because you're probably not fast enough to catch it. So what I usually do is just, if I have extreme faith in a level, let's say this 469, 470 area, I will go ahead and put a position up before the announcement and wait for it to get hit. And that's usually how I do that. So if I'm going to buy a put up here, I will go ahead and spot that out and place it up here. But we'll get that head fake, an immediate down move, and then back up. That's the consolidation, and this is where your true move starts to happen here. It is possible that over the next couple of days, especially going into Friday, that we could have another push up. But usually on Fed days, that first head fake is usually a determination of we're going the opposite way. That's going to be the true move, the opposite of whatever the first immediate move is after the FOMC meeting. So that's the probable day map for me. Let's get some other things to be considering as well. The second scenario is going to be what I like to call a strange day, a rounded reversal today with this strange hiccup at 2 p.m. for the Fed meeting. But on the strange day, we simply, from the open, take off up, possibly to take off up today on the strange day. And midday chop is going to be kind of muted because we could see just the continuation float up through midday chop today because of the Fed announcement at 2 p.m. And then again at 2 p.m. we're going to have this weird or very quick pop, whether it's to the up or downside. But keep in mind, usually whichever direction we take off first, because it is quite possible that we can come back down and that be the initial move, and then up. But usually if that is so, then the main move or for the next couple of days will be in that general direction. So this is what I'm looking for from a strange day, possibly up, down, consolidate, and then we start coming back down pretty fast the second half of the day after the Fed meeting. So that's the strange day, and you should have these levels. This is going to correspond with the key levels that I posted as far as resistance and support. Lastly, on the scenarios, we have a trend day up type of structure. We usually have a gap up, which will likely be small in today's effort, but we'll fade back toward yesterday's close, which was 463.36. We'll usually find support somewhere around or before that area, and then we'll begin the Fed float, this organized, seemingly organized float up. mean, it just feels kind of lifeless. To me, it just feels like it just kind of floats up on a Fed day. But we'll get that coming in all the way up until the midday chop, where it'll kind of lighten up, and then at 2 p.m. we'll get the quick move up or down. Don't know which will happen first, but this is what I suspect will happen. And this consolidation, and then kind of a soft fade into the close. But the key thing in all of these scenarios, pay attention to at 2 p.m., whatever the first move is, that's the head fake. The second move is the primary general move that the market will follow the next couple of days. So watch out for that. That's the most important thing to kind of take away from the Fed meeting. 80% of the time, this is usually how I see it happening on a Fed day, and watching out for the head fake, which usually, if you're fast enough to catch it, gives you a great place to short if that initial or first move is up. All right, so that is today's outlook. As always, know your risk. Please be in defined risk positions, and wishing you a successful day of trading and hopefully a successful end of the year, because this will likely be one of the last few videos until the end of the year. I'm probably going to be traveling, so I'm not going to have the computer power to do the videos, and if I do trade much after this. So with that being said, happy holidays, Merry Christmas, if I don't do another video, and again, wishing you successful trading. Have a great one.